It's my belief that basically Bitcoin is the aggregate market cap within the next 2 years, it's probably going to hit about $1 trillion range. Hey everyone, this is Ian. I'm back with another video about investing. Today's video is a response to a subscriber question. I've received this question multiple times, and the question is about Bitcoin and cryptocurrencies. People have been asking me here on my YouTube channel, hey Ian, you invest for dividends and cash flow. You invest for cash flow, passive income. You want a massive amount of cash flow that's going to cover all of your living expenses, and that's what you're always talking about. However, Ian, I hear out there in the news, in the media, that cryptocurrency, Bitcoin, is a really, really big deal right now. What do you think about that? Well, in terms of full disclosure, I do own Bitcoin in my investment portfolio, and I want to discuss that today, why I own Bitcoin and the rationale behind that. And so I'm going to open up my notes, as I always do, jotted down quite a bit of notes on this. Before I get started, I just want to share a story, an interesting one. My wife, many years ago, she worked at a company where the intern at the company, literally, I think he was a high school student at the time, was building a platform to trade Bitcoin. And he was telling my wife about Bitcoin, how cool it is. And my wife came home, she's like, hey Ian, you ought to look into this Bitcoin. Could you buy some Bitcoin? I looked into it, I'm like, hey, this is a little bit difficult. At the time, this was many years ago, you had to install a wallet on your computer. I don't think they had software at the time that worked on Mac. It only worked on PC, and it was confusing. And so, look, I don't have time. I'm not going to do it. Boy, do I regret that decision. Looking back in time, if I had just spent all of my time on that and invested maybe $5,000, $10,000 in Bitcoin, it could have been millions by now. So isn't that interesting how, and not only millions, like many millions. And so that's very, very interesting how things turn out. But anyways, I ended up purchasing Bitcoin earlier this year. I ended up averaging in between $2,000 per Bitcoin and $4,000 per Bitcoin, in that general range, averaged in over the course of about a month or two. And want to talk about that today. I want to talk about my decision to average into Bitcoin and what it means to my overall financial portfolio. So first and foremost, it's a means to an end. For me, an investment is something that pays cash flow. It's something that throws off dividends. If I make an investment and it's just for capital appreciation, that's not really an investment in my eyes, but it is a means to an end. In my belief, I see Bitcoin going higher. And the reason I purchased Bitcoin really is as a means to an end. The way I rationalize is, hey Ian, I'm going to average in here between $2,000 and $4,000 per Bitcoin. I'm going to sell it probably within a 2-year time period when it gets much higher. And I'm going to take those proceeds and invest them in dividend-paying stocks or perhaps real estate that pays off passive income. And it's a way to supercharge my returns. It's a way to elevate my returns and get to that next level within my portfolio by taking on a little bit of added risk. What else? I am very prepared for swings. And so buying Bitcoin between $2,000 and $4,000, even at that time, I saw a lot of volatility. There were times where I was down 30% on certain of my purchases because the price was going all over the place. And I was very much prepared for that volatility, and I still am. Whereas right now the price of Bitcoin is hovering in the high $12,000 range. At any moment it could tank. At any moment it could drop. And so I'm ready for those swings. And the mentality I approach Bitcoin with is I've only allocated money into Bitcoin that I am 100% willing to lose, completely lose in the worst case. Certainly that would be sad. Certainly that wouldn't be an ideal case. But with investments like this, that's something that I always come to the table with. And worth mentioning, Bitcoin as a percentage of my overall stock portfolio, overall net worth, it is very small. And I think this is very important when approaching these speculative investments, these speculative opportunities. If one allocates too much money, that's taking on undue risk. And I think there's two ways to mitigate risk here. I think one, it's by only investing money that one is willing to completely lose. But two, it's only approaching Bitcoin and other similar risky investments when one's portfolio has reached a certain level. So for me, I've been doing some angel investing. I've been investing in Bitcoin. All of that is a smaller percentage of my portfolio, but I do it to supercharge my results so that I can take profits from those investments and then put them into dividend-paying stocks and accumulate my snowball of dividend income easier. However, if I were earlier in my investing career, if my portfolio were not the size that it's at now, I wouldn't participate in these angel investments or cryptocurrency investments. Potentially I would do on a very, very small scale, but certainly not the way I'm doing now. And so the way to mitigate risk, in my opinion, there's kind of two ways. One, it's approaching it money that one is willing to lose. But two, considering, hey, my portfolio is just getting started, I really ought to focus. I really ought to focus here and not expose myself to undue risk. Or, hey, my portfolio has reached a certain size, I'm okay taking on that risk. I'm okay going for it. And for me, my portfolio has reached that bar, it's reached that size where I'm willing to take on some of these opportunities, some of these risks. What else? Personally, I would not be buying at these levels. When I purchased Bitcoin, it was between $2,000 and $4,000. I averaged in multiple times between that range. In terms of full disclosure, I bought some other cryptocurrencies as well during that time. Not much, mainly Bitcoin. Now, at the high $12,000 range, I wouldn't be buying here. The risk-reward ratio just isn't what it used to be. And I want to share some numbers today. I want to share some facts that frame the way I'm personally looking at Bitcoin. So there's this concept. It's called asymmetrical return. This is a concept that hedge fund managers use. I read about this in the book Money by Tony Robbins. This was a book that was included in Mentor Box. If you've been following my channel for a while, you know that I'm a Mentor Box customer and affiliate. I love the program, and I've done some videos about Mentor Box, so you could check those out if you're interested. But basically, I got this book in Mentor Box, I read it, and the great concept that came out of it is the way hedge funds manage risk is this concept of asymmetrical return. They only invest in something if the upside is huge orders of magnitude higher than the downside. And so when I purchased Bitcoin, with the market cap of Bitcoin in aggregate was roughly $36 billion. The aggregate market cap of Bitcoin now is $216 billion. So it's my belief that basically Bitcoin is the aggregate market cap within the next 2 years, it's probably going to hit about $1 trillion range. And the reason that I believe this is I look at the technology behind it. I'm a Stanford computer science graduate. I believe in the technology. I've read up on the technology. If you want to understand the technology better, there's this guy, Andreas Antonopoulos. He's written 2 books. One that's just a general intro to Bitcoin. There's another that's about programming in Bitcoin. I have both books. I've read the first one. I'm starting to read the second one. It paints the picture of what Bitcoin really is. And so I believe in the technology. I certainly don't believe that there is a bubble here. I believe that there is a sound technology. And the way I look at it is the amount of people working on Bitcoin, the engineers, the amount of computing power out there, the people mining Bitcoin, the amount of collective thought and energy that's put into Bitcoin, the fact that it's a brand new form of currency. The way I look at it is Bitcoin, hey, it's probably worth more or less the same as Apple Computer. Well, Apple Computer right now, aggregate market cap, I thought I wrote it down, there it is, $868 billion. So round it up 1 trillion, it'll be there at some point. So the way I look at it is Bitcoin is probably headed to about 1 trillion, probably have some parity with Apple Computer. I think that's a fair valuation for what it is, in my humble opinion, especially because it's a global phenomenon. It's a global currency that has no borders. Certainly it could be worth more than 1 trillion, but that's kind of my benchmark. And so when I purchased Bitcoin with a market cap of 36 billion, I will make, if it goes to 1 trillion, I will make somewhere between 27 and 28 times my money. However, if one purchases here, because Bitcoin has already gone up to the high $12,000 range, the upside is only 4 to 5 times. So this is a lot different. Making 4 to 5 times your money versus making 27 to 28 times your money, that's a lot different. And so for me, would I risk buying Bitcoin here, losing 100% of my principal to make 4 or 5 times my money? Probably not, because I can do that with a dividend paying stock. It'll take more time, but I can do that, and I can do it with a lot more certainty. And so would I buy Bitcoin when I did, with a market cap of 36 billion and experience 27 to 28 times my money in a period of just a few years? That has a better asymmetrical return. Sure, I could lose everything, but am I willing to lose everything for the opportunity to make 27 or 28 times my money? Yes. Yes, that's asymmetrical return in a good case. In a bad case, am I willing to take it now, 4 to 5 times my money, or lose everything? No, there's no asymmetrical return there, at least in my opinion. It's not skewed. There's no skewed return on the upside. So that's how I'm looking at Bitcoin right now. Now, if Bitcoin were to correct, let's say it went from $12,000 plus down to $6,000 range again, would I average in a little bit more? Maybe I would. Maybe I'd buy a little bit more. That being said, I'm pretty comfortable with what I have now. It's not too much. It's not too little. It's the right amount. If it does hit $1 trillion, it's going to be some good income that I can take, and I can plow into dividends and real estate. So what am I personally going to do? I have a game plan, and I think with an investment like this, it's even more important to have a precise game plan than with dividend growth investing. Because dividend growth investing, the game plan is this: I buy, I hold, I never sell, reinvest the dividends. However, with something like this, there's an element of market timing. And so with Bitcoin, I have a market time horizon. I basically have this two-year horizon. And it's already been, I don't know, half a year or so, 9 months. I can't remember when I first started buying it. But within this year, 2017, really by the end of 2018 is kind of my horizon. And my horizon is, if by the end of 2018 or sooner, it reaches 50,000 to 100,000, that range, I'm going to start averaging out. Just like I averaged in, I'm going to average out. And by the time it reaches 100,000, I'm going to be completely out of my Bitcoin. Now, if Bitcoin does not reach that level within 2 years, what am I going to do? It really depends where it is. If it gets upwards of $30,000, I might start averaging out. If it doesn't, I might hold. I think it depends also on just the regulation environment. I think if there's one risk to Bitcoin right now, it's regulation. It's government stepping in and starting to regulate Bitcoin. And if that happens, it could hurt the value of Bitcoin. It could literally collapse overnight. Maybe not go to zero, but your 12,000 price right now, maybe it gets cut down to back to 2,000. I just don't know. It could come down quite a bit, and I'm prepared for that. So I want to time it, and I want to get out at the right point. Now, worth mentioning, I think cryptocurrency in some form or another will be here. This is the future. And one thing worth mentioning is there may be a government-sponsored cryptocurrency at some point. There may be a US dollar that becomes crypto. I think that's probably where it's going long term. And so Bitcoin, it has its pros and cons. And I think one of the pros is it's global. It has no borders. There's no government behind it. There's no company behind it. It's really the money of the people. That being said, the pros are also the cons. Because of those pros, there's risk out there. There's risk for things happening, and I think the biggest risk comes in the form of increased regulation. And so I just don't know what will happen, and that's why, quite frankly, when my 2 years hits, end of 2018, like I said, that's kind of a hard stop for me. That's kind of a point where I'm like, look, I've been in this long enough. Things will probably happen at some point in the future. I need to get out, but my goal from a dollar standpoint is between 50 and 100,000, start averaging out. And I think the two will coincide, is what I'm saying. So what else? I don't think it's a bubble. So fact of the matter is there's a lot of people out there saying Bitcoin is like the tulip mania, it's a bubble. I don't believe that. I think everyone is entitled to their opinion. I have researched the technology. I have a Stanford computer science degree. The technology is there. It is powerful. It is amazing. The network is there, the computing power, the investment, the engineers. If it were a publicly traded company, I believe Bitcoin is worth as much as Apple Computer. That's my personal opinion, but I don't believe it's a bubble. This is founded in technology based on my personal research. That's my opinion. Now, one thing worth mentioning on Bitcoin for anyone out there is just be mindful of how one holds Bitcoin. There are many different wallets out there. There are many different exchanges, platforms, ways of buying and engaging with Bitcoin. One of the most important aspects of Bitcoin is it's literally just like cash. Once it's gone, it's gone. And so there's no way to get it back. And so if one does invest in Bitcoin, it's going to be important to find a secure way to buy Bitcoin, maybe buy it a few different places to mitigate one's risk of one of their accounts getting compromised and potentially losing Bitcoin. One of the biggest problems with Bitcoin years ago was one of the big exchanges got compromised and the price of Bitcoin had gone down substantially. And so we just don't know what will happen in the future. And if one owns Bitcoin, there are more secure ways to do it. There are less secure ways to do it. And so certainly that's something everyone should be mindful of. So obviously today's video is a little bit different than the investing videos I've typically done on my channel. I want to continue more in the future on my dividend videos. That's my core focus. That's what I'm all about here at PPC Ian. But I did want to answer this question because this is a channel about personal finance. I do own Bitcoin. I have an opinion on Bitcoin. And I thought that this would be helpful for people out there watching. So I really do appreciate the question and I appreciate you watching. Now, if you are going to go out and invest money, etc., please notice that I am not offering financial advice here. This is not financial advice. I'm not a licensed financial advisor. And today's video and my channel is just for your fun and entertainment. If you are going to go out and invest in the stock market, Bitcoin, or anywhere else, cryptocurrencies, please do consult a licensed financial advisor first. And just in terms of a full disclosure, I do own personally Bitcoin. I am invested in Bitcoin and also some other cryptocurrencies as well. Thank you so much for watching the video today. If you enjoyed the video, I please invite you to give my channel a subscription, a thumbs up, a like, a comment. All of that means the world to me. Thank you so much. I will see you in the next PPC Ian investing video.